I made $15,000 in 12 minutes using 2 simple lines on my chart. I used a scalping setup that has worked for me over 300 times last year, and I'm about to show you exactly how it works. Look, I get it. You've probably watched dozens of trading videos where someone promises you the holy grail of day trading, only to leave you more confused than when you started. But here's the thing. What I'm about to show you isn't complicated. It's not some mysterious strategy that only works in perfect conditions. It's 2 indicators, 1 simple rule, and the discipline to stick to it. Let me introduce you to what I call the golden alignment setup. It's built around 2 indicators that most traders use wrong, but when you use them together the right way, magic happens. We're talking about the MACD and the VWAP. Now, before you roll your eyes and think,
"Oh great, another MACD strategy?"
hear me out. The MACD on its own is decent. It shows momentum, but momentum without context is like having a fast car on a road with no signs. You might be going fast, but you have no idea if you're heading in the right direction. That's where the VWAP comes in. The volume-weighted average price isn't just another moving average. It's literally showing you where the big money players are positioning themselves. When institutions are buying, the price tends to stay above VWAP. When they're selling, it tends to stay below. It's like having a window into what the smart money is doing.
Nice.
But here's where most people mess this up. They try to use these indicators in isolation. They see MACD cross over and they jump in. Or they see price bounce off VWAP and they think it's time to trade. That's not how you get consistent results. The golden alignment happens when both indicators are telling you the same story. When MACD is positive, meaning the MACD line is above the signal line, it's telling you momentum is bullish. When price is above VWAP and it's sloping upward, it's telling you the big money is supporting higher prices. When these 2 things happen together, that's when the magic happens. Let me show you exactly how this plays out. I'm going to pull up some recent examples from my trading, and I want you to see how clean these setups actually are when you know what to look for. When you open up TradingView, link down below, go to the Indicators tab and enable MACD and Volume-Weighted Average Price. All right, here's my first chart. First thing I'm looking at is the VWAP. Right here. Price is above at the open, which tells me that my first signal is good. Then I check the MACD. Right now, the signal line is above the MACD line, showing momentum. If I were to take this trade, I'd wait for a micro pullback, then look to place my order right around here, aiming to catch the move while keeping risk tight.
Tight, yeah!
Quick PSA. It's only during the edit that I noticed this stupid fucking mistake. The MACD is positive when the MACD line is above the signal line, not the other way around. I kept saying it the other way around, so excuse me for that. All right, let's move on to the next example. Okay, looking at this chart, I start with the VWAP right here. Price is sitting above for a minute, then moves below it, which gives me a sign to wait. So then I glance at the MACD. It's also giving me a sign to wait because the signal line is not clearly above the MACD line, suggesting there's a bit of indecision. So I ended up waiting at the start, then things got a lot clearer. Both the MACD and the VWAP are positive now. So for my entry, I'd be interested around here to stay aligned with the trend while keeping my risk in check. Here's another example. Once again, my eyes go straight to the VWAP. Price is above it, so I'm thinking bullish. Then I confirm with the MACD, which is clearly positive, and tells me momentum is picking up. Again, I'd wait for a micro pullback, which, when I looked at the 10-second chart, happened right around here. Then I'd place my order near this level to take advantage of the setup without stretching my risk. On to the next chart. Now, for this setup, the first thing I notice is the VWAP. Price is below it, which is leaning more bearish for me. I don't completely write off a chart if the price is below the VWAP. When momentum is strong, price action can change really quick, so in this case, I'll choose to wait. But I also need to check the MACD, and it's positive, pointing to strength in the move. But does that mean I take this trade? No, it doesn't. Both of them need to agree first, and as we see,
it never happens.
Scalping can look simple when you watch someone else do it, but the truth is there's a fine line between quick profits and quick losses. The difference is knowing exactly what to look for and acting on it without hesitation. I've got a short clip from Warrior Trading that breaks down some of the most practical scalping tips you'll ever hear. Watch closely, because even one idea from this could change the way you trade your next setup.
Sometimes people who are adopting a scalping strategy think that they should trade all day long. They should take 100 trades in a day, just scalp, 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 scalp. Okay, that is one way to do it, and there certainly are some traders who do that. But what I'm a big advocate of is quality over quantity. So focusing on the best quality setups. And that means you're looking for a setup that gives you a 2-to-1 profit to loss ratio. So you're looking at the trade and you're saying, on this setup, I'm gonna risk $100 to make potentially 200. you take the trade, and even if you take your profit off really quickly as a scalp trade and you only make $100 on it, that's okay. The setup had the potential for more. The problem is that a lot of scalp traders, they end up lowering their quality standard in order to just take more trades each day. And they're taking trades that at best only offer a 1-to-1 ratio. And when they only get, $50 instead of the 100, when they end up incurring the losses, which of course will happen, they find themselves with a negative profit to loss ratio. And this can be extremely frustrating because a scalper might take 20 trades and have only 3 losses, but those 3 losses are so big, it wiped out the profit from the other 17. That is, you feel so defeated, demoralized, you feel like the worst when that happens, right? So many of you know it, I know it because I was there too. When I first adopted a scalping strategy, when I was getting started, I had a negative profit loss ratio of 2-to-1. My average losers were twice the size of my average winners. And that meant I would have needed to be trading at 66% just to break even. Well, I wasn't trading at 66% because I was still learning the strategy. That's too high of a bar. And so what I essentially did was I set myself up for failure without even realizing it. Scalping is difficult, but trading is difficult too. And there's a lot of things that make a scalping strategy a great strategy for beginners. Instant resolution, reduced exposure time, and just simply the fact that it's easier to predict what a stock is going to do over the next 5 minutes than over the next 2 hours or 3 or 4 days, certainly. In order to improve your accuracy, what I always encourage traders to do is focus on the quality of the setup. Look for high quality setups. And yes, you're leaving money on the table by scalping that setup instead of holding for it to potentially realize, the entire move. But you know as well as I do that if you don't take your profit off the table, it can disappear. And that's why so many scalp traders adopt that strategy, because they've had enough times where they took a trade and they were up a lot, they didn't take anything off the table, and boom, it goes not just back to break even, it ends up turning into a loser. That's the worst. So focusing on quality is number one. When you focus on quality, what that in turn does is it improves your accuracy. When your accuracy improves, you're not having as many losers in total. And most likely, you're eliminating some of those losers that became the outliers that were really big. So now what happens is accuracy improves, profit loss ratio follows, and then consistency follows. And you know what that breeds? Confidence.
But here's the secret sauce that makes this setup work consistently. It's not just about the entry. It's about knowing when not to take the trade. This is what separates the winners from the losers in scalping. If MACD is positive but VWAP is sloping down, I don't trade. If price is above VWAP but MACD is still negative, I don't trade. Both have to be aligned. Both have to be telling me the same story. This simple filter eliminates about 80% of the setups I used to take. And guess what? Those were the losing trades. The other crucial element is risk management. With scalping, you can't afford to let winners turn into losers. My rule is simple. If I'm up 50 cents per share or more and the stock starts to lose momentum, I'm out. I don't care if it might go higher. I take my profit and wait for the next setup. This golden alignment setup has completely changed my trading. I went from being all over the place with my entries to having a clear, repeatable process. MACD positive plus VWAP positive equals trade consideration. If both aren't aligned, I don't trade. It's that simple. The beauty of this approach is that it works on any time frame and any stock, currency pair, or crypto. I use it on 1-minute charts for quick scalps. But I've seen traders use the same logic on 15-minute and even hourly charts for swing trades. The principles remain the same. Follow the momentum and follow the money. Remember, consistency in trading comes from having a plan and sticking to it. This setup gives you that plan. It removes the guesswork and the emotion from your trading decisions. When both indicators are aligned, you have a green light. When they're not, you wait. Most importantly, this isn't about being right all the time. It's about being profitable over time. Some trades will lose money, and that's just part of it. But when you're only taking high probability setups and managing your risk properly, the winners will more than make up for the losers. Watch this video next.